Okay, recording this video Friday 29th of March 2013, just a short video today. It's Easter weekend, no trading today, markets shut, equity markets shut, Globex is shut. So enjoying a nice kind of long weekend. I hope you're having a good time. And Thursday's trade was a classic. It was a classic. There was a potential setup for a short trade, but it's last day of the quarter, and we had a classic case of window dressing where the professionals need the market to end on the highs, don't want any kind of profit taking to scare anybody out, and they stopped the market kind of going into a reversal trade and pushed it up to new highs at the end of the day, and it was just a classic little trade. Let me show you on the 1500 tip bar chart. So just as an example, picture perfect kind of setup on the 1500 tip bar chart goes something like this, and this is the Wednesday bottom into Thursday. So we have pullback to end of trend on the 1500 tip bar chart along with exhaustion patterns. Now when the exhaustion pattern happens on the end of trend, I always say kind of wait to the second cyclical turn, look for the bullish divergences to come in, and we have exhaustion, the first bullish divergence quite close to the zero line, so then we're waiting for a kind of a bigger reading than this but not as much as exhaustion, and that's a flush pattern. That's flushing out the last of the sellers. All these blue professional bars kind of come in here, so this little sequence is kind of a classic. So we have exhaustion, bullish divergence flush along with our pullback to end of trend, testing and so on, and the market reverses into a nice little up move. So that was Wednesday. Then we had a lot of volatility kind of overnight, Wednesday into Thursday. We had some data releases kind of pre-open, and here's the pre-open. Now I always say wait for exhaustion patterns after the open of the day for the full liquidity of the market. So although we'd had this exhaustion pattern pre-open with the data release and we have bearish divergence kind of coming in here, for me that's not kind of good enough to reverse the market. We need to wait for the exhaustion pattern during the open of the full liquidity of the day, during the day trading session. So we're waiting for that one, and here's the classic little setup. Exhaustion buying on a left shoulder, bearish divergence after that, we get pullback to end of trend and a flush pattern. So we flushed out the last of those buyers, we've had our exhaustion, we've had our bearish divergence, and we had price kind of come in here. The professionals kind of coming at those highs, then we have an amateur up bar, this big amateur up bar kind of testing into those highs there, bang, and then we start breaking into a downtrend here below support on the 1500 tip bar chart. So the other kind of rule of thumb is 11 a.m. That's kind of the window for this kind of reversal trade to be happening, and 11 a.m. happens to be here in the market, just in this little sequence here, and we're starting to reverse by 11 a.m. So for me that kind of looks good. That's a good setup for a potential reversal trade. We've got everything kind of happening. We've got the price exhaustion with pullback to end of trend. We've got volume exhaustion with exhaustion volume and bearish divergences and flush patterns, and then we've got professionals active at the highs, and then we've got some testing by the amateurs, so everything looks picture perfect. We start our decline, bang bang bang, and 11:30 this is what happens. A couple of blue professional bars kind of step in here. Pretty big ranges. On the 1500 tip bar chart, exactly the same thing. We've got a big blue professional down bar here. At those lows, it was a cyclical support, or coming up to a cyclical support on the 4500 tip bar chart, and this thing stopped in its tracks. Now, I suppose to some extent you could say, well, this is being led by the amateurs. We kind of have Rambo patterns kind of down here, so the majority of this kind of sell-off move was kind of amateur-led, and yep, fair enough. The professionals then step in at this point, and then they goose the market up to the end of the day, closing at new highs. It's kind of a good print for the end of the quarter. It means everybody's happy. Their quarterly performance numbers kind of look good and so on. Plus you've got a long weekend, Easter weekend. You've got all the amateurs kind of looking at their portfolios over the weekend, checking their numbers, checking their charts, and they're saying, the market's still going up. I'll just hold in there, or I'll put some more money in the market. The last thing the professionals want at the end of a quarter is for their numbers to look poor, and then people on a long weekend looking at charts that kind of sell off on a Friday afternoon, and people thinking, maybe I should just take profit and kind of get out and put in trades for Monday and Tuesday of next week. So it's a classic. It's called window dressing, and there we go. Professionals kind of stepped in at that point, goosed it up, and then you can see at the end of the day they were pretty active in terms of taking profits, getting out again. It's the end of the trading week, so closing out positions. Not unusual to see a large number of blue professional bars at the end of trading week and at the end of the day, and at the end of the quarter, I suppose, as well. Anyway, so That was the 1500 tip bar chart, a classic little trade that looked like it was going to take place, but no, wrong day for that kind of setup to take place. And just going down a couple of look at this in terms of better volume. This is a 5-minute chart during the intraday, and you can see here we got that kind of stopping volume kind of coming in. This is high volume churn on better volume indicator here on these bars here, these two bars here, and that is relatively high volume for relatively low range, which means that there's a lot of buying coming in to this little decline, compressing the range. And so I paint those green on better volume here on the histogram. They're actually blue on the paint bars. That's not the same as the professional pro-am amateur, but effectively it's the same thing. It's professionals kind of active there, picking it up, stopping this decline, and then pushing the market kind of up to new highs. In terms of bigger picture, where are we? Well, I think we've got to be very careful. Now, remember, it's like, beginning of the new month, Monday, Tuesday into April, we're going to have equity flows, into all kinds of pension funds and so on, money kind of being reinvested and so on. We've also got, this kind of little positive bias at the moment. Got a lot of amateurs over the weekend thinking I'll put some more money in the market. Equities is kind of going up. It's a good story. Let's buy in. But, let's just wait and see. I'm a little bit nervous. I think Monday, we could touch a little bit higher, but I'm looking for the next kind of support level on the 40,500 tip bar chart to kind of come in and potentially be broken. So again, just reiterating this 40,500 tip bar chart, we had a nice little trend move that ended pullback to end of trend. We've now gone through this cyclical activity, support and resistance levels on these better sine wave on this time frame, holding every single one. They're not being broken into trend moves, and it's a little bit of a complex correction, kind of wedge pattern kind of coming up. We've got a lot of blue professional bars, kind of coming in on the 40,500 tip bar chart. Not unlike this kind of a day when we saw quite a few during the day. On the 40,000 chart, it's usually see one, maybe two. You got one here, two on this day, 1, 2 on this day. We've got 3 kind of up here at the highs on this 40,500 tip bar chart. It's very weak. We've had our exhaustion buying. This was a bit of a rush for those. This is where I said we ran out of bullets here with this exhaustion selling. Everybody was too anxious to get this thing going, so it's gone the other way. They'll all have had to have covered. The market's kind of going up in this direction. So maybe a little bit of a spike. Let's see what happens Monday into Tuesday. But if we get some weakness and a support level kind of coming in, I'll be looking to see if that's kind of gets broken to the downside. The flip side of this argument is we've got these resistance levels kind of printed in here, and a break above that into new highs, and the thing kind of rushes away into the next trend kind of move. So I don't know. In terms of the oscillators, we're looking for these to be taking profits. The trend oscillators, we've had this really nice sequence of cluster of buy signals kind of come in. We're now above the zero line. I'm looking for Monday maybe to put in a little bit higher print on the trend oscillator, and then maybe start to turn over, take profits in the next day or two, Monday, Tuesday, Wednesday, something like that. So it's, at some point we'll get that. But for me, the clue will be if breaking into a downtrend or below the next support level that prints, and if we do happen to rush away into new highs and so on, then so be it. Kind of go with it. The reason why it's quite the beginning of next week is going to be important in terms of turning points is look at the currencies, and we've just been winding up on the daily charts into these turning points. So dollar index, been talking about this forever and a day, and I was thinking about doing another video on dollar index this weekend, but we're in an uptrend on dollar index and weakness in all the other currencies. So here's Canadian dollar. We're coming up to a cyclical resistance on the Canadian dollar on better sine wave, so that's going to play in the beginning of next week. Aussie dollar, we had it print here, and we've kind of had some weakness over the last couple of days. Pound, again, cyclical resistance kind of coming in on the pound. We're in a downtrend on the pound. We're below support on the daily. This will be a pullback and a downtrend when it goes off, so the next couple of days here. Euro, we're in a trend move here. We kind of came together, but they've kind of diverged again, so kind of went a little bit parallel at this point. So we had a little bit of strength on Thursday on the euro, but this bullish divergence right on the zero line, so we've got to see a flush. So if we have a little bit of kind of strength in euro, I think the only we'll be breaking to new lows in time. So that's what I'd be looking there. And then Japanese yen, same thing. We've got this cyclical cross happening on the daily chart, kind of going to play in Monday, Tuesday, Wednesday, something like that. So that's why I think the beginning of next week's really important in terms of turning points. And turning points of those currencies, those kind of risk-on currencies, kind of going off would mean money flowing into the US dollar, particularly US bonds, and potentially a little bit more into equities. But if they start to take profits a little bit in equities, it would still be into US dollars and US bonds, but we could have weakness in equities. Kind of wait and see, but that's why that turning point is really critical. We're winding up for that on these daily charts. And then just in terms of the markets, we hear uptrends on the E-mini. Crude, this has been a really strong move, but watch out. This was exhaustion buying with a Rambo pattern up here. That's unstable. I talk about these things being unstable. This is, the amateurs kind of jumping in at the end of this kind of move. They've done it in size with this last kind of move up here. That's an unstable type of pattern. So just watch out for that. On the flip side, bonds. We're in an uptrend. Talked about this a couple of days ago. So, safe haven of US bonds. So we're starting to break into uptrends here. So that's why we could get weakness in European equities and risk-on type currencies and flowing into bonds. Silver printed pullback to end of trend, but I think that's a fraction early, where that bullish divergence came in close to the zero line. So I think we've got to see a flush pattern from there. If you look at gold, slightly different. Gold's got a little bit more time to run, so you'd be looking at something between the two of them, pullback to end of trend starting to go off there, and this is kind of considerable selling. I don't think this is over in gold. If you look at the weekly chart, we've not had exhaustion selling on the downside enough to end this type of move, and I think this type of selling volume here was really kind of getting this going rather than climactic. I don't know. Let's wait and see. We've had pullback to end of trend on silver, but we've still got that flush pattern to go, I think. So gold's going down. If dollar index continues up, gold and silver should weaken. And then this is the other kind of tell. So although crude was up into an unstable pattern of a Rambo pattern, amateurs and exhaustion buying, copper showing the reverse. Copper, a sign of kind of global economic growth, if you like, and we had this severe weakness. We kind of congested into a little bit of a wedge pattern here. Bang, on Thursday's trade, sold it down again. So copper is particularly weak at the moment, and so that tends to show kind of weak global growth and so on. So there we go. Just some thoughts. Window dressing, classic kind of trade into the end of the quarter, and then the beginning of next week is going to be critical in terms of those timing of those cyclical resistance coming in on the risk-on currencies and what it does to the rest of the markets. Anyway, I hope you're having a good weekend.